Hi, Luke Fannin here from AIT Department of Accounting. I'm looking at T accounts and filling them out. So, like the page says here, once you've identified the two accounts affected by a transaction, you need to know which side of the account gets hit with the money. So, this is a T account, simple T, and the debit or left-hand side, the debit side is the left-hand side and the credit side is the right. And it's the same with capital. The debit side is always the left and the credit side is always the right. Here's a transaction. The owner lodged 1,500 of their personal savings to the business bank account. So when you're doing this, you have to identify, normally it's two accounts. In more difficult transactions, there may be more than two, but don't worry about them for now. The two accounts affected for this transaction that need to be recorded are that the business bank account is receiving money and the other account is capital, in that the owner has invested capital in or equity into the business and the business owes that money back. So the rule for knowing what to do is to debit the receiver and credit the giver. So our two accounts are bank and capital, and so we want to put 1,500 in the receiver account on the left-hand side or the debit side. So debit the receiver. So bank is receiving money. We put in the 1,500 in there and give the date. And the capital account is giver. The owner is giving capital. So 1,500 on the credit side or the right-hand side and the date. And the description is important. It's normally the name of the other account. So in the bank account, there's no point putting bank as the description because you know it's bank. What you need to know is when you look at the bank account with 1,500 in there, where did it come from? And it came from capital invested. So it'll always be the name of the other account. And in the capital account with 1,500 in, your description should be where did that money go to, where was it invested, and it was invested in the bank. So here, I'm just going to look at another one of those. So there's the rules, the receiver account and the giver account. You need to figure those out. So here are two transactions. And the first transaction is on the 1st of March, withdrew 600 from the business bank account to use as a cash float for the shop. So we're just taking money out of the bank account to use as cash in the business. So the two accounts affected, normally the two accounts are in the description. One account should be bank and the other account that we need to record is cash. And the easiest thing, and you don't have to do this receiver giver, but it does help, I think. The bank is giving money here and the cash account. So we need to record that the cash account is receiving money and the bank account is giving money. So you're going to just move down, open up a T account for the two items. So there are two accounts, bank and cash. And the 1st of March, it was 600 taken from bank. So bank is the giver, as I said. So we're going to put 600 out of bank and cash is the receiver. So debit the receiver, credit the giver. That's the most important thing. You get the money on left and right. Always there has to be left and right. If you, for instance, had in a transaction, you ended up like this, two right or two credits, it's wrong. You can't end up with that. Your account will be wrong. So you always have to have one on the debit side and one on the credit side. And the total of the debits should equal the total of the credits. Sometimes it has to be broken up. And that was on the 1st of March. And we put in description. Wrong description. Okay, so 600 out of bank and 600 in cash. The next transaction was on the 2nd of March, sold goods for cash. So what are the two accounts for that? Like I said, normally the name of the accounts they're in the transaction. So definitely we sold goods for cash. So we need to record the business is receiving cash. So it's receiving cash. So that'll be the receiver. So cash on the left-hand side is going to be hit. And the giver account is going to be the sold goods. Now, anytime you see goods for resale, if we sell them, we open up a sales account. If that was purchase goods, we'd open up a purchases account. So you never have a goods account. If someone wrote goods, that's wrong. You have to open up either sales for sales or purchases for purchases of goods. So here it's sold goods, so it's sales. So now we know that we put 1200 on the left-hand side of cash and 1200 on the right-hand side or the credit side of sales. So we just go down to the T accounts, open one up. And once again, the most important thing to get right is the money figure or the amount on the correct side of the account. So credit sales, debit cash. And then we can put in our dates and descriptions. So 2nd of March, we got cash. Where did it come from? It came from sales. And in the sales account on the 2nd of March, we sold goods and we sold them for cash. And it'll be the name of the other T account is the easiest thing to remember. And that's it. You just need to, I suppose, practice, go through all the different type of transactions. So the way you practice is you get a list of transactions and you figure out what's the receiver giver. For example, here are some transactions, and there's the account that should be debited. Here's the account that should be credited. You can pause the screen. So once again, 50 check to Carl. Carl is receiving the money, he's the receiver, and bank is the giver. If we purchase an asset, we open up the asset account. We're receiving a lorry and we're giving cash here. So I don't have any figures in these transactions because there's no need. Here's some transactions for purchase of goods. When you see check, you use bank. So purchase goods on credit from Kelly. Always when you see purchase goods, you open up a purchase account, and when you're purchasing goods, you're receiving them. So purchase is always a receiver. And then in this instance, Kelly is the giver. They're giving the goods. Note how it's different. Here was purchase goods by check, so it's the same debit purchases, but bank is the giver. And there's a couple of other transactions for purchases. We'll just look at sales. Once again, 3 columns. The transaction is here on the left, and this is the account that's debited, and this is the account that's credited. And if you sell an asset, you need to, the asset is the giver. So the computer account or computer equipment, wherever it was originally put in when it was purchased, will be credited, and the receiver here is bank because we received a check. But if you see sold goods, you open up a sales account, and when you're selling goods, you're giving them away. So, well, not giving them away for nothing, but they're leaving the company. So they're the giver, and that's sales, always on the credit side. And then it's either going to be bank or cash, or you'll debit the receiver if it's on credit, like here O'Neill. And there's some other transactions, returns of goods, sales returns, a receivable paying us money, and then giving someone a discount. And just a couple of miscellaneous expenses. Expenses are fairly easy where you're paying by check or cash. Get the check and cash right. So if we've paid wages by checks, so that's bank is one account, and bank is the giver, which means the expense account has to be the receiver because it's always one left, one right. So it should be easy to get the bank or the cash, like here paid rent by cash. If you weren't sure what side rent goes on, definitely you should get cash because cash is leaving the company, cash is the giver. So the other rent, the expense account, has to be on the left-hand side, it's the receiver. There's a lodgement of cash. Capital and drawings, just equity transactions, and then the other one we look at are more difficult expenses. Here for an accrual or amount due. Depreciation. Bad debts. Provision for bad debts. And then a reduction in the provision for bad debts. So there's just some examples of receiver giver, but you always go, what do we mean by receiver giver is what we looked at when we looked at the Excel, where with the T account, we put things on the left and right hand side, as in down here and here. Thanks for watching.